a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Biotech ETFs are in focus here now with our ETF Research Director, Nina Mishra, providing some important details on them. So biotech stocks, actually, that whole sector has seen some strong M&A activity this year.
Yes, very strong M&A activity. In fact, global deals announced so far exceed about $190 billion,
oh, wow.
Which is on track to exceed the earlier record set in 2015. And this trend is expected to continue in the coming months, and there are many reasons behind this trend. Tax reform is one of the important reasons. Thanks to tax reform, large pharma and biotech companies, they are able to access their billions of dollars which were parked overseas, and they are willing to use those dollars to acquire smaller, innovative biotech companies. And lower taxes are also helping these companies. And then of late, there have been developments of many innovative drugs and therapies, and many of these drugs and therapies have been approved by the FDA. We have seen some innovative developments in important areas like cancer treatment, gene therapy. So because of these new innovative drugs, some of the earlier blockbuster drugs are no longer in demand. So that is why bigger companies are looking for new success stories, and if they cannot develop new success stories, new successful drugs, then they are looking to buy them. So that is one of the reasons why smaller biotech companies have been doing much better than larger biotech giants this year. So biotech space in general has done better than the broader healthcare space, but within the biotech industry, there's a lot of diversion in performance, with smaller companies doing much better than larger companies.
All right, we have 3 different ETFs in this group that we're going to be looking at with you. First one being the iShares Nasdaq Biotechnology ETF, IBB, the ticker.
So these are the 3 most popular tickers, ETFs in this space, and I wanted to highlight that there are some major differences among them which investors should understand, and due to these differences in their focus, their performance this year so far has also been very different. So IBB is the most popular biotech ETF. It is the most popular one in space. It has more than $9 billion in assets under management. It's a market cap weighted ETF. So market cap weighted ETF means the larger biotech giants, they occupy most of the portfolio. So in fact, you can go to iShares website for this ETF and look at the holdings. It charges an expense ratio of 47 basis points and has 192 holdings in fact. So with 192 holdings, it is well diversified, but despite that diversification, you will see that these large companies, Biogen, Gilead Sciences, Amgen, they have very heavy weightings in the portfolio. And Biogen, in fact, recently surged due to news about Alzheimer's drug. And it has about 82% exposure to biotech industry and about 10% exposure to the pharma industry.
Okay. Then there's the SPDR S&P Biotech ETF.
The ticker is XBI. This has about $5.5 billion in assets under management. It's an equally weighted ETF. So equal weighting means that single company risk is largely eliminated. So that is the reason why this ETF is liked by many investors, and equal weighting also means a lot more focus on smaller companies compared to market cap weighted ETF, which focuses more on larger giants in the space. So again, you can look at the website for this ETF. It has an expense ratio of 35 basis points, so it is one of the cheapest in this space and pretty popular, as I mentioned. And looking at the holdings here, you will see that you see some of the well-known names, but you will see that they are held in very small weights, just less than 2%, which again eliminates single company risk. And risk for biotech companies are generally riskier than other healthcare companies. So this is important in this space. And then you'll also notice that this focuses entirely on the biotech sector compared to the other one, which has a lot of focus on pharma companies as well.
And lastly, the First Trust NYSE Biotech ETF.
The ticker is FBT. This has more than 1 billion in assets under management, charges an expense ratio of 56 basis points. And this is also an equally weighted ETF. If you go to the external website, you can learn more about this ETF. And this has only 30 holdings. So due to 30 holdings, it has a fairly concentrated portfolio, even if it is equally weighted. So that is why you will see that companies which had less than 2% weight in the other equally weighted ETF have about 5%, 4% weights in this ETF's portfolio.
And that always we ask that question, how do they all stack up?
Yeah, this chart in fact highlights the differences in performance, and that is mainly because of smaller biotech companies doing much better than the larger biotech companies. So I have compared IBB, XBI, FBT, the three ETFs that we discussed, with the broader healthcare ETF, ticker XLV, and the broader market ETF, ticker SPY, the S&P 500 ETF. So you will see that FBT and XBI, which are equally weighted due to their focus on smaller companies, have returned more than double that of the market cap weighted ETF. FBT is up more than 16%, XBI about 15%, whereas the market cap weighted ETF IBB is up just about 7%, but which is better than the broader healthcare ETF's return of about 5%. SPY has also returned about 5% this year.
And we also ask, do you own any of these?
I do own XBI in the ETF investor portfolio that I manage.
Okay, well, that was certainly interesting. Thanks for all of that information. Don't forget there is more ETF information on our website. It's in the ETF section of Zacks.com. Use the Funds tab in the top toolbar on the home page to help get you to that section. Don't also forget Nina's podcast. She has a lot of other interesting ETF information that she discusses in her podcast. All you need to do is get to the podcast page on Zacks.com to find that. With Nina, I'm Terry Ruffalo.